Okay, so I want us to learn together the importance of yesterday closing price. Okay, Paul Tudor Jones very correctly said that always consider your entry as the last night close. Of course, because that's where the window, the trading day ends. So why not? Why not? So this is V75 1S, and then this is let me go back to daily. Okay, daily time frame is right here with me. Where do I start? Let me start here. Okay, so this is 24th to 25th here. So I've marked the closing price of 24th here, which is the red line. Now it is 25th, and I want to trade on 25th. Okay, so for me to know where the market is likely to go, I very quickly switch to weekly time frame and go left and see what the closing price means. Look at these areas here. So the closing price is a strong resistance here. Look at this area. So we don't expect a continuation. We expect a reversal. Okay. Now, having done that, now let me go to daily. No. Let me go to 4 hour. So I'm going to mark high and low of the first two candles, 4 hour candles of the day. I'm going to mark this area here. Okay. I'm going to mark that. The high and low of this candle, which is the first 4 hour candle of the day, and then I'm going to mark the second candle as well. Now, so this candle, this is the first candle, this is the second one. When you look at these two candles, they are an indication of the day that is ahead of you. They are an indication of what is likely to happen during the rest of the day, because the price is locked in a box, and we can clearly see that price didn't get out of the box for the whole day. So this is 1, 2, 3, 4, 5, 6. This is the last candle of that particular day. There was no trade. And then now let me go back to daily. Now I'm going to mark the closing price of that candle, of yesterday. Now of course it is at the same place as the previous day, so we are very confident that the market is going to fall. Okay, again I'm simply going to mark the high, this high, the high and low of the first candle. This is the first candle here, the first candle today, the first 4 hour candle, and then this is the second one here. Of course it broke this structure, so yes, that's it. So as per my strategy, okay, right at 8 a.m. when this 4 hour candle close, which is the second one, I already have breaking market structure, bearish breakout structure here, confirming to me that the market is going down. Okay, that is the first step. Now to get a trade, now let me go to H1. I want to see a full break of the 1 hour candle. Of course I'm using 1 hour candle because of convenience. I want to see full breakout below this area for my entry. Of course one could have entered in this candle here, which closed at 7 a.m., which is 8, 9, 10 a.m. my time. It's okay. Or even this one here, which closed at 9 a.m. But then it is also important to look at convenience, the convenient time for you. That's one. And then you need 2 candles to confirm, because sometimes as all of you will see in other examples, the closing price is not out of the way until when the next candle closes. So To get rid of all of that, you wait for 2 candles. You have 2 candles of 8 hours of price action. It is very likely that you will get clear direction. So this candle closed at 8 a.m., which is 11 a.m. my time. This closed at 12 a.m. I could have sold this candle here, but I did sell here. Let me show you my history. Yeah, so I sold here, I exited somewhere here, and then I sold again here. So that is yesterday and today. And then let me go back to this day here. Okay, let me go back to this day. Now you learn very clearly why it's important to have price action of 2 candles to confirm direction. So this is 23rd. This is the first candle on 23rd here. I'm going to mark the closing price of that day, and then I'm going to mark the high and low, the high of this candle, the first 4-hour candle, and its low. Okay. Now the second candle has hit the low of the first candle and closed back into the range. What does that mean? It means that, okay, even if I may not necessarily need to mark the low of this candle, because this is a failed breakout. The second candle has failed to break the low of the first candle, and that is showing us direction. One could have bought this candle straight at 11 a.m. my time, put your stop loss here, you target this high. If you miss that, or if you are going exactly according to the rules, it means that you would wait for a good 1-hour candle to close here. Let me show you H1. Okay, so this would be your entry, and admire the fact that this candle has broken the closing price. Here, it has broken the closing price, and then it is pushed up. Lastly, before I go to another instrument, let me erase everything here, and then I didn't switch time frames here. Let me switch time frames. Let me mark this closing price. Of course, looking at it, it is clear that the market is pushing up, but to be sure, let me try to go to weekly time frame and see what price action is telling me. Let me go to weekly and then go left. Okay, the daily again. Now, okay, so this one was a difficult call, but fortunately for us, by the time we got an entry in 1-hour time frame, we had the closing price out of the way. Okay. But even at 4-hour time frame, we can clearly see how important this closing price is. Look at this area. Look at this area here. This is the time frame. So look at this area. What does that mean? It means that if you buy below this line, if you buy here, you have to exit. You must exit at this level. You must exit here. Otherwise, if you want to buy, if you get an entry to sell, you can sell. But if you buy, should be a take profit until when this level is taken out. And it was taken out, as you see, by this candle, by this 1-hour candle. Have I lost my place? H4? Okay, it's right here. It was taken out here. Taken out by the 1-hour candle for a very successful, easy trade. Look at this candle. When this candle closed here, it is confirmation that bulls are in control. And then this is the wick of the daily candle. If we go to the daily candle, this area is the wick. It is the wick section of the candle. Let me go to this is 24th. Let me go to daily. Yeah, look at that. It is the wick of that candle. Lastly, let me go to This is Saturday, this is Sunday. Let me go to Saturday, and then Saturday leading to Sunday. Again, I've marked the closing price, and then looking left, look at that, look at this area, look at this. So what does that mean? It means that we must take it into consideration, that closing price. And then let me go to H4. Okay, what is H4 showing me? This is the first candle, this is the second candle. Let me mark this high. Okay, let me mark that high. Okay, and that low. This is not a strategy, this is price action, okay? It is not a strategy, this is just price action. So this is the first candle, and then this is the second candle for our candle of the day. Look at what it has done. It has punched the low of the first candle. That is a strong indication of where price is heading. Now we don't need to mark this low here. We don't need to do that. Now this is 8 a.m. my time. No, 8 brokers time. Now let us go to H1 now to see how we could have entered. Wow, look at that. This is 8 a.m. This is not a trade. You cannot buy right below the closing price. It is a strong zone. Okay, you might have taken this, but the very fine trade would be this candle here. Super. That's it. As simple as that. As simple as that. Okay, I took a trade. I struggled to trade the 10-1S yesterday. Let us examine why. This is the closing price. This is the closing price of this candle. I'm in a trade. Here I'm holding a sell. I'm holding a sell. My take profit is below this area. Okay. So let us examine why I struggled. So this is the 25th. Let me go to H4 and 25th. So this is the first. This is the first candle. The first candle is this. Okay. This is the first candle. And then we have the second one. Okay, we have the second candle, which is this one here, and then notice that it has failed to break the high of the first candle. Okay, now let me go to H1 to see what went wrong for me on this particular day. So this is when the second 4-hour candle closed. Now where was entry? I think it was just a difficult day because look at these 1-hour candles. This one broke below into this zone, but maybe one would have entered and have a stop loss hit, but then there was an entry here in this candle quite late during the day. Things happen. Okay, lastly let me look at this 75 today, daily time frame. Okay, daily time frame, and then the closing price is here, H4. First 4-hour candle is that one. No need to mark this it's too far. You can just mark the low of the second candle of the zone which was broken, And then when you go to H1, you have this would be a very nice trade. You can target this high for safety, but there was another entry here. That's it. And then there was an interesting entry here in B75. Look at that. Okay, weekly time frame, looking depth. This area is a very strong zone. Look here, and then H4. Okay, and H4 you have here clear breakout 1 2. Let me, doesn't look very nice, but let me let me follow the rules. Okay, the rules 1, and then okay, so this kind of closed here, the market slow, and then the high of this candle, it is not necessary because by the time this kind of, because we are marking the zone after close of this candle, so by the time this candle closes, this one, you have this strong resistance, so you don't need to mark the high candle, just mark the low of that candle. So you are looking at this is your box now, this is your price action box. Now let us go to H1 to see what my entry would have been. Okay, let me go to H1 quickly. Okay, go back to daily to see possible areas to take profit. This low here, that was liquidity, because they are after liquidity. They are after liquidity. That's a fact, okay? So let me go to H4. No, H1 now. H1, what's going on? Okay. So this is, when did this candle close? This candle closed here. This is 8 a.m. The candle closed. I do nothing. I wait. I cannot, this is not a good entry because it is not a clear break of that lower zone, not a clear entry also. This pulls back, so a very good entry. So I have an alarm which works very well. So my alarm would have gone off at this candle. No entry for me. I just wait because I know they will come to the test cut area. And then this candle here, which closed at 14 o'clock, which is 17 o'clock my time. This is the entry for me. Sell with stop loss here, my take profit is right here. Not a long distance, but a good trade. Okay, I'm going to make another tutorial for currencies using the same approach. Okay, let me share right here. Let me change. Switch to currency chart. Let me share this. Let me switch to this right here. Share that, okay? Okay. This is gold, and then the last candle yesterday, where is it? It's right here. So I'm going to mark the closing price of this candle, and then I'm going to mark the first two candles. So this is the first candle of the day, this is the second one. You can mark them. Okay, I'm going to mark. Yes, that's it. This low, of course. So this is the first candle, first 4 hour candle of the day today. The low, okay, that low. So I have these two lows which are quite close together. So this is the first candle, this is the second candle, this is the Asian session now. And then now so even before I do that, let me go to weekly time frame to assess the power of the closing price. Look at this area here. Look at this area here. Look at this area. So what is that telling you? It is telling you that the closing price is a strong zone. It is a powerful zone. Okay? It is a powerful zone. We don't expect bullish movement from that area during the day. And then you have a very clear breakout structure here. Okay? Even at 4 you can see how nicely the closing price lines up with price action on the left hand side. Look at this area here. Look at this area. So you may not need to switch time frames to notice. Look at that. So we know for sure that gold is going to be bearish today. Okay? And then you have this by 9 a.m. we don't expect anything to happen. Clear breakout structure. Clear breakout structure by 1 p.m. my time, GMT plus 3. So what do we expect now? We expect price to pull back into this area before we get a sell opportunity. If I use, let me try to see if one could have used 1 hour time frame to get an entry. The answer is yes. Because this is okay. This is the last candle. Okay, this is the last candle of the second 4 hour candle. This is the last 1 hour candle. Okay, this is not an ink. You cannot sell here, you cannot sell here. It's just not clean. You cannot sell here. Okay, you might have, this is, okay, you might have taken this, but it's dangerous because by this time the equity, New York equity market is not opened. A very nice trade will be after this candle closed at 5 p.m. If you mark this area properly, here, this is when you get a very good entry. That's a very good entry. I entered, but unfortunately I entered late. Shame on me, but that was a very nice entry. You could have sold at 3 p.m. for a quick scalp up to the low of the day, but then you had this very nice trade during New York. Here, this was a very nice trade. Yeah. Then look at the USD card. It is just the same music exactly. It is the same shit. Okay. Okay, let me look at USD card quickly. Look at USD card. I'm going to the 4 time frame. This is the last candle yesterday. Here, I'm going to mark its closing price, and then I'm going to daily time frame to assess the strength of that area. Is the zone. You can go to daily and weekly. It's up to you. Wow, look at that area. Look at this powerful area. So what does that mean? It means that this is a breakout, this is pullback, and then the market will trend. That's what it means. You see? So this is break above that strong zone. If you go to the left at 4 hour time frame, you can also see the strength of that area. Data is easier. Let's look at this area. So that is the breakout, pullback, and then trend. Now let me go to 4 hour. Okay, let me go to 4 hour. So I'm going to mark, I'm going to mark the high and low of the first 4 candles. Look at this. This is the high. Okay. This is the high here. Even before I continue to mark the low zones, this is a very clear breakout. Okay. This kind of closed at 8 a.m. my time. Very clear breakout. And then this kind of closed at noon, gave us a new low, and then now look at that 50, 50, 50, a trade which I took here. This is a very nice buy here. Put your take profit somewhere there, you are good to go. Yeah, that's it. So during the last 30 minutes or so, I have discussed the power of the closing price. You are not safe, your trade is not safe until and unless you have taken the closing price, yesterday closing price, into consideration. You have to take that into consideration. See? So every time, so because it's the one which forms the wick of the daily candle here, it's out of the way, you get a trade. Okay. What about this pair yesterday? So, okay, look at this pair yesterday here. This was the closing price. Okay, H4. Okay, so this is the 24th here. Here, this is 24th. This is the first candle. This is the second candle. Okay, let me go through the process. First candle. This is the first one, this is the second one. Okay, this is the second candle of the day. This candle closed at noon. This candle closed at 4 p.m. my time. Now what is this telling me? Maybe we go to 15-minute time frame. Okay, wow, look at that. You sell here. You sell up to where? Up to the closing price. Okay, you sell up to the closing price. Very strictly up to the closing price, you exit the market. So if for the bearish move to be sustained now, once the closing price is out of the way, you would take another trade, hoping that if the market was bearish. So you always have to consider the closing price. That's the point. You always have to consider the closing price. And the best days are when there's been a break of structure emanating from the closing price. Look at B75 and all other things. So that's it.